Keynesian monetary stimulus are an absolute nightmare. And if there's evidence of it, it's the euro area. Let's look at some graphs. If you look at this is the change GDP of the European Union. What we can see is the evidence of stagnation. Very low growth, very poor growth. But what's most staggering is to see that this has happened with chains of stimulus packages. The Jobs and Growth Plan of 2009, the Juncker Plan, and now the Next Generation EU Fund. But it's more interesting when you look at those two economies, Spain and Italy, which have been the biggest beneficiaries of the Next Generation EU Fund. Italy has seen no benefit from it. Spain has very far from the average of the European Union, which in itself is exceedingly poor. That is showing us that the Keynesian monetary stimulus and the fiscal stimulus packages implemented by the European Union are creating not positive, they're actually creating no real multiplier effect. Let's go to the next graph, which I think is important. In the next graph, what we can see is that if the European Union is delivering any growth, it's coming from the Eastern European economies that abandoned socialism. The problem is if they are brought into the disaster created in France, Italy, Spain, and other economies in which the level of intervention is so huge that those economies simply cannot grow. And this is an important lesson. If you abandon socialism, you are growing and you can get strong levels of growth. But once you get to socialism, look at what happened with Spain. Look at Italy. There is absolutely no real level of growth in GDP per capita, particularly in the case of Spain, which is atrocious. That is what happens when you blow GDP with immigration and debt. Let's go to the next graph and see what is going on with GDP per capita. And this is the proof. The government in Spain tends to talk quite a bit of the strong level of growth, leading growth. However, if you look at GDP per capita, this is OECD estimates, what you can see is actually that GDP per capita is in stagnation, and that GDP per capita has done virtually nothing since 2019 after the monster slump of 2020. Furthermore, what it shows is the euro area growth in GDP per capita is atrocious. And I think that that is also a reflection of the negative multiplier effect of these stimulus packages. Let's go to the next graph, which will show us a little bit more why is the European Union going so badly. This graph, courtesy of Ned Davis Research, shows us that the model of Eurozone economic timing is consistent with not just slow growth, but slow growth in the middle of the largest stimulus package in many years. Remember that the Next Generation EU Fund was supposed to increase the GDP and potential GDP, and it's actually doing the opposite. I mean, there is absolutely no multiplier effect. It is so obvious, it is painful. Let's go to the next graph and see what is going on. What we can see is that it doesn't work in terms of the economy, it doesn't work in terms of real wages, it doesn't work in terms of unemployment. Unemployment rates are in the euro area and in the European Union remain elevated relative to the United States, etc. But it doesn't work in terms of the stock market either. The European stock market is actually doing very little, and it's actually doing very little relative to the United States. So what it shows is that what these monster stimulus packages is actually creating is literally stagnation, and that stagnation doesn't create value, it creates value traps. Therefore, the next time that they tell you that a great stimulus package is going to drive higher potential growth and improvement in productivity and improvement in technology, remember, governments never create growth, they absorb it. That is a fact. And the more you copy the euro area, the worse you're going to perform in your economy. Keep defending freedom.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.